This is Tim Phillips, Chief Investment Officer at Phillips & Company Advisors, and I'd like to welcome you to our Q4 2020 China A Look Ahead. Please read all the disclosures and disclaimers carefully. The Chinese consumer has become a greater part of China's overall GDP growth. Consumption as a contribution to China's GDP growth is now up to 181%. And as those consumers get more confident in this consumption-oriented economy, you can see Chinese consumers spending down their historically high savings rates. One of the key drivers to get them to spend down those high savings rates is wage growth. And you can see on the far right-hand side, wage growth is occurring at double digits throughout the last 5 to 7 years. China has true macro policy control on their economy, with both fiscal and monetary policy transmitted without the traditional political infighting you might see in America. Monetary policy has been expanding with both total social finance, which measures the volume of funds provided to domestic financial institutions. Further, their currency reserves continue to grow with robust export growth. And finally, their domestic stock market has been the recipient of strong inflows from local investors. Clearly, the investor class in China is feeling confident. The Chinese economy has returned to normal mostly, or at least back to pre-COVID-19 levels. Restaurants are busy, retail sales are recovering, manufacturing and service sectors are above pre-COVID levels. Airport traffic is snapping back quickly, and that's just to name a few indicators. You can look through this slide to see a few more return to normal indicators. I'd like to zoom out a couple thousand years and have you reflect on the fact that China once dominated global economic output, as did India. Only in the last 250 plus years has America been the global economic heavyweight. It wouldn't surprise me if we were in the middle of a very long road back to global dominance by China. Of course, America will react and respond, but it's natural for China to want to grow and prosper. That's exactly why we have a specialty focus on China and access to their domestic equity markets. Notwithstanding the current political rhetoric, China is an incredible force for generating positive returns. Take a look at a recent interview I did with Kevin Xu, a leading China tech expert, in the link below. Our recommendations for China are straightforward. Let's continue to focus on the domestic consumption upgrade cycle with this rapidly growing emerging middle class. Areas like telecom, media, and technology will be the recipients of much of that wealth creation. Avoid over-leveraged property names and focus on overall growth with reasonable forward PE valuations. We're certainly going to monitor the impact of the China-US tech war. Is this rhetoric or reality? And I'd invite you, as part of our strategy update, to review our discussion with China's tech expert, Kevin Xu, on the dispute between China and the US in the technology sector. And you could do that by clicking this link here. On behalf of all the partners and employees at Phillips & Company Advisors, I'd like to thank you for taking your time to review this brief look at Q4 China, a look ahead. If you have any questions, please email me at the link below, and certainly you can email or call your advisor at any time. Thank you.